Thanks very much, Lori and Mark. I'm with you, with Judd Gregg, Senator from New Hampshire, member of the Banking Committee. Thank you, first of all, for the time. Appreciate it. We have been waiting with bated breath for Senator Dodd, Senator Corker to release a draft bill, rewriting the rules of the road for Wall Street. You're a member of the Banking Committee. You've been part of this process. Have you seen a finished product yet?
No, I haven't. Other than in the area of derivatives, where myself and Senator Reid from Rhode Island are working very hard to try to put together an understanding and agreement, a package that we hope will address that area. I haven't seen any written language.
At this point, are you as optimistic as Senator Corker was this morning, that not only that there's a draft bill out there, but it's a bill that you can support and that Democrats will be willing to support as well?
I hope so. That'd be great. I think we need a bipartisan bill, and I haven't seen the specifics, so I wouldn't want to address whether I'm hopeful or not, or whether I'm optimistic or not, but that's the way we should go, in a bipartisan way, in my opinion.
All right, we've been looking at some aspects of the bill. Aspects of it have been leaking out as well, and I want to at least throw some ideas out there that have been put on the table.
Right.
Consumer financial protection. This has been a sticking point from the very start. A lot of Republicans have raised questions about a standalone independent agency. The latest idea has been perhaps to house something within the Federal Reserve itself. What do you make of that idea?
Well, it makes a lot more sense than to have it standing alone. I mean, you've got to merge, in my opinion, at the same level of responsibility and effort, consumer protection and safety and soundness within a regulator's responsibility. So that when the regulator goes out in the field, they're looking not only at the safety and soundness of the lender, but they're looking at how they're dealing with consumers. And those have to be together. You can't separate them. If you put consumer over an independent agency, it's going to end up being a political event. And you'll find out, I think, that it contracts credit rather than expands credit, because you'll get a bunch of people running the consumer agency who have social justice as their purpose, rather than having the banking industry work correctly and allowing credit to go out in a safe and sound way.
You know that the criticism already. We've heard Chairman Barney Frank of the House Financial Services Committee say it's a joke to put this in the Fed. The Fed fell asleep at the switch when it comes to consumer protection.
Well, as I look at this, the Fed is probably one of the best regulators we have. And there's no question there's a lot of fault to lay at everybody's feet, and the Fed deserves a fair amount of the blame, as do all the other regulators who are oversighting this, the SEC, the OCC, the FDIC. There was a lot of regulatory failure out there that were led to the problems of late September and October in 2008. But in the context of who we have available to us, who are the good regulators, the Fed is still the strongest, because they've got the expertise and they've got the resources to promote and support that expertise.
You've been a defender of the Fed. At the same time, we're also hearing a separate idea that in terms of supervising banks, institutions, financial institutions, the Fed may be losing some of its authority there. Only looking at the large institutions, state chartered banks, for example, would move somewhere else.
I think that's a mistake. You know, I can understand why it's happening, but it's really moving.
Is that a deal breaker for you?
Well, I'd have to see it. I'm not going to say anything's a deal breaker. I'm interested in getting a product here, but that's like moving the cup holders around on the Titanic. It's not even the chairs. I mean, the proper regulator here is the person who does the best job and who has the most resources to know how to do a good job and has the expertise to do it. Now, the Fed has that in the banks which it presently oversights. You know, if you want to look at the genesis of this failure of our financial institution, it wasn't necessarily regulating the smaller and mid-sized bank that was the genesis of the problem.
Let me ask you about the derivatives section, which you have played a role in, trying to craft a compromise here. It's been a big question about end users, exempting end users. How do you address that? And there's some suggestion here you're going to have to scrap the entire derivative section because it's just too complicated.
Well, I'll tell you, it's complicated. It's certainly hard to understand. We've spent a lot of time on this on a daily basis, hours and hours, and what we're trying to do is put together a program which, speaking from 20,000 feet, does two things. First, it limits the potential for systemic risk, and secondly, it creates a marketplace where America still remains the most competitive and best place to create credit and capital. That's our goal. Now, when you start translating that into derivatives, it gets extraordinarily complex. We're not going to scrap it. We've made great progress. Senator Jack Reid from Rhode Island and I have been working on this for a long time. We are vetting it aggressively. Everything we're trying to do, we're vetting with the agencies, with the dealers, and with the users to try to make sure we get it right.
All right, Senator Gregg, we've got to leave it there. Thanks very much.